With a slew of reform measures in the insurance sector announced by the government, how does the game change? I sat down with Ajay, Srinivasan, Chief Executive Financial Services at Aditya Birla Group, and I asked him if the overall mood and business sentiment has turned around.
I think the first thing to say is I think that it's good news. I think the set of reforms recently announced are good news. They cover a very broad range of sectors and issues, and I think all of them have been critical. I think it sends a signal of hope clearly that there's more to come. I think in many ways it's kind of put a bottom to the deteriorating sentiment that we were seeing, and I think clearly raises expectations of what is to come in future. Having said that, I think obviously I would echo what many other people have said, which is really now the challenge is making this happen, and this alone is not going to be enough to get economic growth back. I think this is important, but there will be many other things required to get growth back on track.
The Finance Minister has laid down a detailed map for fiscal consolidation. Many people say, well, the intent is right, the plan clearly lacks details. Do you believe this number of 5.3% to be credible?
See, I think a large bit of it will really depend on things like disinvestment, if you ask me, Harsha, because I think if you look at year to date where we are at, expenditure is running much ahead of plan. Revenues are running much behind plan, function of just the growth in the economy having slowed much below expectations. So I think to hit the 5.3% number, current estimates from our point of view, for instance, is around 6.1. So to get from 6.1 to 5.3, I think is going to be a function, to my mind, of disinvestments and non-tax receipts.
Sure. The Reserve Bank, even in its policy a few days ago, spoke about the fact that inflation remains a primary concern. The dominant concern remains price stability. It says that on one hand. On the other hand, it injects liquidity into the system. Do you see a contradiction? Is the RBI saying something and doing something else?
No, I don't see a contradiction. I think clearly the RBI is concerned on inflation. Inflation has remained sticky. You could argue that even with all the demand contraction they've tried, inflation hasn't come down. You could argue that. But the RBI obviously still believes that there is, inflation has to be kept under control, and a tight monetary policy is required for that. At the same time, by ensuring liquidity, I think they're providing some buffer to the banks to deal with the other issues that the banks are facing, and is providing liquidity to segments of the economy that will continue to require it. So I think by doing that, I think they're managing to make sure that there is adequate liquidity and supply of money in the market, but it's still not sending a signal of rates coming down as yet.
The larger concern, Ajay, is the complete lack of corporate investment spending. I mean, data suggests that you're not seeing fresh capital investment happening at all. What do you think can trigger investment cycle to restart?
That's a good question, because I think if you go back to the mid-2000s when we had strong economic growth, a large bit was driven by investments. If you look at new project announcements currently, I think it's not been as low as it's been currently for the last 15-20 years in my view. So new project announcements itself have really come off. I think you're seeing some amount of project investments from projects that were created earlier. At the same time, I think if you look at, say, the steel and cement sector, we're seeing capacity utilization actually coming down. So they're down to the 75-80% kind of levels. So I think and if I give you another data point, if we look back at the mid-2000s, repo rates were broadly where they were at this point in time.
Correct.
So I think you could argue, therefore, interest rates alone is not the issue. Clearly, there is an issue with policy support and with the general sentiment to invest. And with capacity utilization at 75-80%, you clearly need to see demand picking up before you see some investments coming in. I think the good news, though, at least in the near-term horizon, is the number of stalled projects. Because if you look at just the data of projects that have been stalled, either because of not getting clearances or because of not getting linkages, it's a fairly significant number. So one quick way to kind of get investment back on track could be to just get these stalled projects moving again. That will give you some near-term kick. But ultimately, to get investments back on track, I think there's going to have to have project investments coming back.
If you heard what the Reserve Bank of India said yesterday vis-a-vis growth, when do you think interest rates will start cooling off?
So I think from what we're hearing from all the data, it seems like the expectation is that interest rates will tick up first in Q3. So they're expecting inflation by December maybe even up to 8%. But after that you will see you will see a cooling down of inflation, and that might be the time you will start seeing interest rates coming off.
A question on the insurance and financial services space. What have you made of the reforms in the insurance and pension sectors? Do you see greater collections happening by virtue of the tax benefits that have been offered?
I think the big announcements, I mean, all of these are still announcements, they still have to be enacted, but I think the big change really is going to come from tax changes in pension. If you look at the pension sector, used to be 25-30% of the industry till 2009, 2010. A lot of that went away after that because there were changes in the way the product design kind of came about.
Correct.
So I think to bring about tax change in pension could really bring about a very large amount of new money to the industry. It won't come this year. I think it's a function of it coming through the tax reform coming and then being followed up by by collections. But I think that could put the industry on a very sound footing going forward.
Do you see banks becoming brokers as opening up a huge distribution opportunity for you?
Over the last couple of years at least, I think the economics of distribution have been fairly challenged by the changes in regulation. And that has meant a reduction in earning for a lot of people who are monoline distributors. And therefore banks have a natural advantage given their customer franchise and their ability to sell multiple products. So I think see the banks having increased their presence in the sector over the last couple of years. I think that will continue. So I think therefore to open up banking to a broader range of providers will really allow us to grow the industry and to reach places where it hasn't reached today. So I see it's a good idea, and I think it's a good good step forward to grow the insurance industry.
What's your assessment of the mutual fund industry right now? Indian mutual funds are perhaps the cheapest financial products in the world, yet somehow one does not see the growth in this sector matching what people call is the actual potential.
Yeah.
Why?
So I think if you look at other parts of the world, Harsha, I think triggers for mutual fund growth particularly have either come from tax, so as in the US and the UK, large tax incentives to equity mutual funds have driven a big growth in mutual funds, or it's come from a culture of investing in equity, which you see in a number of other markets. There's basically a culture of investing in equity. We don't have both of those today in our market, and if you look at household savings, you still have a large propensity to invest in bank deposits and much more safe investments in gold, in real estate, much less in capital market related instruments. My sense is that will change. It will change over a period of time, but it will have to change because this current form of investment is unlikely to help people meet their financial goals. And I think therefore it's a question of time and effort in terms of financial literacy that will really lead to changing. I think the industry is in a good place. The industry performance of products actually has been very strong. Whether you take equity or fixed income, as an industry, I think the industry has done a very good job. So then you only have to wait for the distribution and the time for this to turn.
We're also talking at a time, Ajay, when the Reserve Bank of India is evaluating new banking licenses. Do you aspire to be a bank?
Yes, we do. We see it as a strategic fit for the group. If you look at our current base of financial services, we pretty much offer the entire product suite other than what you could do with a bank. We see a very strong strategic fit with what we do, and we are hopeful that we could apply.
When do you think this is likely to pan out? Are there any regulatory clarity that you're wanting to see?
I think the final guidelines from the RBI have to come. I think that is pending a change in the Banking Regulation Act. So we will have to wait for those things to fall in place.
Sure. Just a question about the NBFC space as well. We have seen, again, we are talking at a time when the asset quality concerns are hogging the headlines, both in the banking and the non-banking space. The RBI has been pushing for tighter provisioning norms. How do you see this playing out? Do you see the concern over bad loans being far more exaggerated than what they are, or is there a serious problem?
I think in any economy that's kind of grown the way we have over the last few years, and where you see a slowdown, I think you're bound to see some amount of stress from economic from the slowdown. And I think probably that's what you're seeing by and large. There are some sectors obviously that are tougher than the others, but I think it's really a part of the cycle more than anything disproportionate to that. I think the NBFC sector has been a growth sector. I think it continues to grow. It looks attractive. If you look at the growth over the last year, my guess is the industry as a whole would have grown in the mid 20% range. So it's an attractive sector. It's a sector we think will continue to grow and continue to provide credit to sectors that are probably not reached by the banking sector today.
Ajay Srinivasan of Aditya Birla Financial Services. Up next.